Hey traders, TG Watkins here. It is October 13th. I hope everybody's staying safe out there for Friday the 13th. Yeah, I got some friends. Actually, one of the workers that's over at the house today, he said he was born on Friday the 13th, so we're kind of chatting about that. Anyway, hope you're all doing well. And we do, as a reminder, have the Orlando Summit coming up. This is a Simpler Trading sponsored event. This is actually preceding. It's at the beginning of the weekend for the Money Show. And so if you guys get your tickets for this, and then we are also going to be, our whole crew is going to be at the Money Show. And I'm going to be on there as well. We've got a couple things, little board thing, and then I'm going to be presenting as well. So get your tickets. I know we can do also online, virtual, that kind of stuff. So yeah, it'd be great to see a lot of you there. And for the Simpler Trading Orlando Summit, if you guys are Simpler Trading subscribers, it'd be great to see you guys there. Put some faces with some names or some screen names. Anyway, we also have some passes, some discount passes. If you guys are interested, just reach out to simplertrading.com. Alrighty, so let's then jump over to the market. We've had quite a bit of a pullback, and I'm looking at this, and I would be leaning towards this still being bullish. We got to an area where the market was overbought and kind of got far away from the moving averages. But then we're back down here to support. So this is kind of my line in the sand. We're about halfway through the month, and so we don't really know where this is going to go yet. But if we're going to continue to be bullish, then I generally need to see price stay above the monthly 10. So that's kind of my big picture thing. The other thing here is that we look at the weekly chart, and we could see that price, we know over the last several weeks got really, really overbought. Basically, this huge run from May, and then we had June, July right there. And it was just too much. The market needs to rest after a while. Then we have seasonality, and August and September are seasonally weak. And now we're into October. So we're going to see if we get a nice run into the end of the year, because typically the end of the year is bullish. That's usually the strongest time of the year. And this pullback basically, I think, has set us up pretty well. So I would like to lean on the bullish side. The internals have swung all the way to the bearish side. So we kind of need to come back from the bearish side. And we've pulled back to all of these areas of support. So as far as the market goes, I would like to lean bullish on these things. Now, that doesn't mean everything is going to participate. There's still a lot of junk out there, and we're not necessarily in a rip-roaring or a very strong bull market, but I do think things are going to continue to kind of move upward. Part of the reason I say that is if we come over here and we look at the breadth internals, and we kind of look here. Let me get, so we can do that. And what I'm seeing is we basically got, call it a washout, but here we go. You can see that the 20-day got down to 7%, and the number of stocks over their 50-day SMA got down to 7%. So this was really, really, really low. And you can see just how these lows on breadth do help line up with the lows in the market. Okay, so that's kind of where I'm like, okay, we should be seeing a bounce, and now we need to see if we can get some more follow through, since we definitely let a lot of air out over the last 2 months. So yeah, we just got to see if we can actually go bullish into the end of the year. And then if we come over here, I've kind of mentioned this before, that these peaks of new lows tend to align up with the lows of the market right there. You can kind of see the same thing, and definitely the big one back in October. So I'm looking at that and saying, hey, we had a little bit of a crescendo, and now we need to see this, and now we need to see new highs continue to rise. The other day, Thursday, was a bit of a drop. So yes, there were some more that got new lows. I think it was because of the bond, 30-year bond situation, and that probably spiked a lot of things. And then we'll have to see how today does as far as kind of recovering this. So yeah, I don't have the data quite yet. So that's kind of my backdrop. And if we come over here and we look at the daily and hourly chart, we were able to take a very quick short trade with the market right in through here. Oops, let me get my yellow one. Right in through here, right to down here. Now, maybe the market goes a little bit lower, but this is one of those Moxie patterns that I look at, and basically works perfectly right here from the 200 to the 50. So quick little trade. Nice, took a bigger position size on it, acted as a bit of a hedge, and now I want to see if we can start finding some support at the 50, maybe just below the 50, something that's that case, and then we'll continue to move up. Now, I can't call it yet. It's still too early. We need to see how Monday, Tuesday, Wednesday kind of pan out, but that's generally what I'm looking for and seeing if that's gonna happen. The NASDAQ, if we kind of look at that, and then also if I show you on the bigger time frame for the NASDAQ, I was looking at this earlier, and it kind of occurred to me, squinting my eyes on this, I'm like, well, doesn't that look interesting? Do you guys see we basically have a cup with handle? So yeah, not too shabby. And again, we got overbought, and now we've basically been flagging back to potential support, and so we're going to see if that starts working out. And you can see that the NASDAQ is stronger than the SPY because it had pretty much a double bottom. You know, it did make the lower lows, but not anything in the way that the SPY did. So it has relative strength, and it too had a pullback. But we were ready for this. We were looking for this pullback. It has, so far has done everything we want as far as this pullback goes. Now we just need to see if this pullback is into support and if it can actually move up from there. If it can't, then we will probably get some sort of bounce, and then it'll continue to go down. So you do need to keep an eye on both directions just to help verify stuff. All right, and then the IWM, this one has definitely been pretty weak. And I was on the final bar a few weeks ago, and I was looking at this. And what I was looking at is that we did get a fresh Moxie price trigger back here, and it was looking pretty good. I was very happy that we had this whole level, and we had the first time over the 50, and then we had the second time over the 50. And from there, I was pretty much expecting this thing to pull back, which makes sense because it came right up into overall resistance, right up and through there. And so definitely was expecting a pullback. And a pullback with the Moxie indicator also firing. What I really would have liked to have seen is this hold right here. Maybe dip just a little bit below it, but basically I really wanted to see price come down and hold the weekly 50 and the weekly 200, and I wanted to see the Moxie indicator stay above zero. Well, that didn't happen. So you can see this does look pretty rough. We are practically back down to the lows. We've just been in this channel for a while, and it just can't really get up and get going. So that's why I was saying that I do think that the next direction for the market is probably going to be up. But I don't know what kind of participation, and it might just start being the mega caps that are kind of carrying the market and trying to be a flight to safety. So small caps, they come in spurts and flurries, and that's when they work. But we might just be catching these oscillations. So we'll have to see how long this can oscillate. And if maybe the next time it bounces, does it actually go and break to new lows, or can this actually start getting up and getting someplace? Yeah, I wanted to follow up with that since I talked about that on the final bar. If we look lower down, the only thing I'm kind of looking at right now, actually I'm going to come over here because it'll be a little bit easier to see. If, and this is still the very early stages, but if this is a bottoming pattern, we have a double bottom with positive divergence. And not only do we have positive divergence, we have a potential trampoline move. Now I have to say potential because it hasn't actually kicked in yet. But basically when price is below the 50 and the Moxie indicator is above zero, that is a trampoline move. So I'm looking at this and saying, oh, I see the potential. Now we need to actually see if this holds and can hook to go to the upside. And if that does, then what that would form is the elf shoe that I talk about all the time on the daily chart. And so, yeah, I think that we've had over 2 months of the market pulling back. The breadth indicators, the put-call ratio, we have a lot of things saying, hey, this is pretty darn bearish. So other than the market simply actually falling apart, and I know that there's the conflict with Iran and Hamas or Israel and Hamas, that's going to be, that's a huge issue. And not to make light of it at all, but we need to see what that's going to do for the market and how much that might affect it. So we do need to keep that in mind. We have a lot of black swans possible out there. So, and then we have to then talk about gold because of what's going on here. So gold is, call it a flight to safety in this regard because of what's going on with that conflict. And the only thing I can point to is just that it was showing signs of being oversold. You can see there was a huge gap between price and the weekly 8 EMA, and it came down here on the 30 ATR and the weekly 200. And so it did get pretty oversold and then snapped back up. Obviously, it helped that the conflict that was going on. If I didn't know that the conflict was happening and I saw this, I would chalk it up to basically an oversold bounce. for now. You can see the price got way outside of that third ATR and really far off of the 8 EMA, and then just turned around and rocketed back up. So yeah, just kind of like a spring, just like a compressed spring. And great, had a few days of straight up, but after this, there's no way I'm chasing it here. Yeah, I would take profits if I were in something like this, and I would, if you think it's going to be bullish, then I would just wait for the next one. But there just has not been anything to work with for gold. I mean, you get these moves up and it fails, move up, fail, and move up. Well, I'd at least expect a pullback from here. Now the question is, will the pullback hold, or will the pullback continue to fail like this and like this? So just gold and precious metals, they just don't really interest me, even though there was a pretty big move in through here. Some of the other ones I wanted to show you, if we look at PAYO, this was actually pretty interesting. This is really the power of the Moxie indicator, because I think a lot of times, we look at moving averages, and this, honestly, on the daily chart, that looked pretty good. I came across this, I was looking at it, I was like, oh, okay, pulled back to the daily 50, and then it looks like it was going to be flagging on it, and then should move back up. But then you can see all of a sudden, boom, it broke the daily 50, and down it went. Now, was there a way to know that this was happening and this was likely to be the next move? Yes. If you look at the hourly chart, you'll notice that price tried to get over the hourly 50 quite a few times, but notice that the Moxie indicator was below zero the entire time. So this was telling us, the Moxie indicator was telling us, like, hey, it's not even positive. It's not over zero. This probably isn't going to go long. It's just not looking good. That's not a setup for the Moxie indicator. And lo and behold, chop, 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 and it finally broke. So the Moxie indicator was the thing that told you this entire time that price was likely not going to move up, and it meant that most likely it was going to break below the daily 50 at some point. So I thought that was just a great example of the power of the Moxie indicator. Not to mention, we can see that the 50 was below the 200, and that also told us that things weren't going to go. I mean, you could even just look at this with all of its price situation, and anytime it tried going up, it just couldn't hold. It just couldn't hold any of those moving averages for some time. So it just, not something you really want to be in, especially if you're trying to find a longer term trade or a swing trade or even investment, thinking, hey, this looks like a great flag into the daily 50, only to be surprised that it finally fails the 50. The hourly Moxie indicator was all over that, telling you what to do. So on that note, we just updated our rooms in the over at Simpler Trading. Oh man, these things look great. The audio is great. The screens are great. The clarity and how crystal clear these things are, it's looking great. So we got a lot of new stuff going on over there, and just want to tell you guys, if you're interested in the Moxie indicator or these new rooms that we're in, anything else like that, have $7 trial for 30 days. Come on over, check it out. And over here at simplertrading.com/Moxie. All right, guys. Thanks again. We'll see you at the next one.